Hi, everyone. Welcome to the Timing Research Analyze Your Trade, number 197 in this new format. Anka and I have been talking about doing a event like this for a few months now. We were going to do it under the Synergy Trader series, but we thought, changing the Analyze Your Trade would work better for everyone. The point here is to just have a bunch of good chart analysts on and have you be able to answer or ask questions or give them symbols to talk about. And so similar to the Synergy Trader series, I am going to record each presentation individually, and those will be permanently available on the Timing Research site and the Timing Research YouTube channel and podcast channels as well. And of course, all of this is for educational purposes only, and trading is not suitable for all people. So please consult a financial advisor before you make any financial decisions. And so we were lucky enough to get Erin to start out the day today, and she has her own trading room where she does something very similar to this. So it's great to have her here as the first presentation. So I'm going to go ahead and turn it over to her.
All right, thank you. And again, as David said, my name is Erin Swenlin from DecisionPoint.com, and we do two products. And I know I'm not going to do a huge commercial here, but I did want to let you know what I do, because one of these that I do, Decision Point Diamonds, is really doing what I'm going to do today, which is analyze your symbols. The only difference is with Decision Point Diamonds, I will bring 10 stock symbols, ETF symbols to the table once a week for my subscribers. So you get 3 stocks on Tuesday, you get 3 ETFs for ETF day on Wednesday, and on Thursday I take reader requests. I look at all of the requests that I've received, and then I pick the ones that look that look good to me, that look like they could be diamonds in the rough. So as well as doing that for Decision Point Diamonds, there is a subscriber only trading room that is very similar to what we're going to do here today. So if you're interested in trading rooms, if this is your thing, Decision Point Diamonds would be an excellent addition to your analysis process, so that you can get used to seeing how I trade and learn the process and hopefully improve your trades. I know I have subscribers here. Somebody's saying they can't hear me, but I think
I think, it looks like, are you able to move the mic a little closer or something?
I'll try. So hang on. Like I said, I got this new computer set up, and trying to get everything to work right in the way that it normally does. So I will try and speak a little bit louder. Hopefully that is helpful. Drink a little coffee here. I had to roll out of bed early. It's on the West Coast for me.
Yeah, that's weird. Zoom is not even registering that you're talking at all. But I mean, I can hear you.
Yeah. I'm very faint, but at least my voice
Okay.
is there.
Yeah,
So
that's better. Whatever you were doing right there.
okay. So I'm moving it right in front of me. Let's see. I think I can turn up my gain a little bit. Okay, hopefully that is a bit better. Okay, I will try and speak a little bit louder. Since I did wake up, I'm still kind of got my voice that when I wake up. Okay, so Decision Point Diamonds is where you might want to go look. I also do a free trading room that is also posted to YouTube, that you'll find on Stock Charts YouTube channel or on Stock Charts TV if you use their app. And it is free, and I do pretty much the same sort of thing I'm doing now, except Carl Swenlin, my father, joins me as well. So you can ask him questions, and he gives you a little bit of insight into what he thinks about some of the symbols that we bring to the table and that are brought to the table to us. So if you're interested in this kind of thing, I'm going to give you a special at the end of my program here, And then you can try us out, or you can save a lot of money when you do try us out. So there's a little bit of enticement there to stick around until the end of my presentation. I do want to welcome all of my subscribers that did join me today and my followers. Really appreciate your support. All right, so let's dive in. So what I'm going to start off with is we're going to do just a slight little market overview, because I think it's important to know what's going on overall in the market before we get too excited about what we want to invest in. Obviously, with the bear market, with what we've been experiencing, our trading has been a little bit different, I would say, for most people, looking at more inverse ETFs, looking at more short side investments, or simply doing what I'm doing right now, which is limiting your exposure. That is something I do tell all my subscribers in every publication, what my exposure level is. So I do share that. I don't share my portfolio, of course, but I do let you know what my thoughts are on the market. And I will tell you right now, I'm currently 15% exposed to the market. Doesn't sound like a lot, but I'll tell you what, being at 10% with a 5% hedge through this was definitely not nearly as painful. And actually, I did okay. I made a little bit on the decline. And I did give my subscribers that heads up, and then they also know my exposure level. But you can see the market, super great day the last 2 days. Looks like we're pulling back slightly. We hit that 20-day EMA's overhead resistance, so I'm kind of not surprised to see this. Decision Point also informed their subscribers last night that we had experienced an upside exhaustion climax. The day before that, right here, we had experienced a upside initiation. So we let everybody know that, hey, it looks like prices are going to go up. Yesterday, we got that exhaustion climax, and that suggested that we would see either a little bit of a pullback today, or we'd see a little bit of consolidation or a pause, digestion, whatever you want to call it. And sure enough, the indicators were right on there. We've also been looking at our short and intermediate term indicators to confirm or not confirm whether we have a new bear market bottom, or are we looking at something a little less lasting. So this is a chart with really our 4 main indicators in the short term and in the intermediate term. Let me take this crosshair off. There we go. So what we look for, of course, are turns on these indicators. And you can see that the STOs were the first to turn over. They never turned up when we did turn up on the market here. But once we started declining and started to make that move, we started to see the STOs making their way back, contracting back up. And that is, of course, a bullish sign. This is what's really important to us right now. These indicators have been really, really good at timing the tops and bottoms of this market in the intermediate term. Well, there are intermediate term indicators. I hope they would do that. So what we've been watching for are these indicators to confirm what's going on, because it takes a lot to get them to kind of change their direction. And so when we got the first rally move, we saw that the ITVM and ITVM started to contract. So that was excellent. It's confirming to us that this is going to be a longer term bear market rally. And yes, we do not think it is the end of the bear market. We do believe that this is just one of those little blips on the radar as we go down. Those bear market rallies can be very well, they can be very profitable, to be honest, once you get in and kind of have that feeling that things are going to continue. But these climaxes, these indicators have been so good for us. And I think they've really helped our subscribers quite a bit with their trading. All right, so that's kind of the main ones. I can go over oil, bonds, all of those, if that's something you want to do. I still am seeing people that don't hear me. Feel free to interrupt me if it's really bad. Let's see. Try to take this. I don't know if this is helping. I don't know if that helps, but we'll try and hopefully make this work. Okay. Let's see. Like I said, I really apologize. I'm still trying to get my computer to really know what's going on for me, and it's still struggling a little bit. All right, so I can go over crude oil, Bitcoin, all of those, but I want to give you a chance to give me your symbol requests. And if you do want to have those done, just go ahead and put that in the chat. That would be very, very helpful. Let's see, what else can I say? But that's kind of where we're going to go. I did see there is one symbol request already, so I'm going to go ahead and put that in. Yes, as they said, type your symbol requests in the chat box. This is a great chance for you to get used to how this is going to work before all of the other folks come in. So I will look at TSM. I see UNG came up. Excellent. Okay, so we'll start with TSM since that particular person was in here early. I think I can give them their first symbol request for sure. So what I'm going to do is I'm going to go over the daily chart, and I want to give you an idea of what I'm showing you on this chart, of course, before I start showing these over and over. I have some primary indicators that I use, and I use relative strength. I will tell you right off the bat, relative strength right now is not particularly useful. Something that is outperforming the S&P better be seriously outperforming the S&P right now. So if you see rising relative strength, that does not mean that that stock or index is moving up. It just means that it's moving down slower than the S&P. So, but I do use relative strength. So here's the RSI, and what we want on the RSI is for it to be positive. We want it to be above net neutral 50. So that tells you that it is then in the top of its 2-week price range. So this is kind of telling you where it is in relation to the prior 2 weeks. Okay, so in 2 weeks, this price level is not quite, but I don't know, I guess a third into the price range of the last 2 weeks. So we want to see something on the top path. That tells you that there's some momentum going on. It also is an excellent indicator of overbought and oversold. So that is why I include that one. The PMO, my price momentum oscillator, very, very similar to the MACD, very similar to the PPO, but we have different calculations, so it will react slightly differently from the MACD and the PPO. So you'll notice a similarity if the particular charting platform you use does not have the PMO, you can usually get away with the PPO. But I know that I believe we're on Thinkorswim. I know that StockCharts.com owns our indicators. So you'll always find all of our indicators on Stock Charts. If you are not a Stock Chart subscriber and you subscribe to our website, you will have access to our charts. So you do not have to be a member or a user of Thinkorswim or any charting platform. We do provide those charts to our subscribers of what we are looking at. All right. I know all this preface to doing all the good stuff. I use on-balance volume just to give me a sense of positive divergences, negative divergences, confirmations. The stochastics, I love stochastics. I never used them until really the last 2 years. And mainly because I never could really see the correlation between the PMO and stochastics. Well, it kind of occurred to me as I was studying them that really that's not what I want, is another indicator to look like another indicator. The stochastics are very, very sensitive. That's why you'll see a lot of twitchiness, but I think that they're really great early on indicator of price trend changes. The PMO is going to be slower, so I like having that stochastics in there to give me that sort of that move on the inside, knowing that, okay, well, maybe the PMO hasn't gotten that crossover, but stochastics are moving really strongly to the upside. Here is the relative strength lines I was talking about. First, I compare the industry group to the S&P. Excuse me, hang on. My bad. Let me wet my whistle here. All right. Okay, so I compare the industry group to the S&P. Then I compare the stock to the S&P. And then I compare the stock to the industry group. This is kind of the really interesting piece to me right here. Most people do this, compare the stock to the S&P. Some people do this, compare the industry group to the S&P. But not many people that I know compare the stock to the industry group. And the reason I do this is to just see, do I have a strong performer from within that group? So for example, back here, you can see in July that relative strength for the group was improving, but relative strength for TSM was falling. So that tells me that during this period of time, there were other choices within that industry group that would have been better. This is not going to necessarily turn me away from a stock, the relative strength, but it does give me some insight, particularly this indicator window, as to whether I have the best stock or not. So let's proceed. So TSM is a semiconductor. I think most of you are familiar with this stock. And semiconductors, I have been expecting to do well, given that they are in technology. And I've not been a technology fan for quite a while, which makes sense. But right now, I'm beginning to open my eyes to the possibility that this sector is going to really start to show some strength, mainly because we are getting ready to go into a bear market rally, and technology has been really beat up pretty good. So right now, TSM has turned around like most of the market here. We don't see any kind of support here because during this period of time where my chart is, which I think this is about 8 months, we don't have that. So I'm going to look at the weekly chart as well. But right now, really nice rally. I like that it's moved above that 5-day EMA, but we still have the 20 and 50 to deal with. And this in particular, now I need my crosshairs back. This level here of support is really, or resistance now, my bad, is really the key right now. And you can see that yesterday it got right up to that level. And then today, after hitting that level, it's starting to pull back. Right now, the market is pulling back slightly. I would say that part of that reason is it just got ahead of itself. I mean, we had two incredible rally days. Yesterday was particularly big. So to us, it does make sense that we're going to see a little bit of pullback today on some of these stocks that maybe had really good moves to the upside. So we are seeing that right now. I'd be a little concerned because it hasn't gotten above that overhead resistance, but you can see that the PMO has turned up and stochastics are rising. Right now, the RSI is negative. That wouldn't prevent me from investing, but it would give me a little bit of pause. Maybe I would want a little bit of a thin stop on it. So for me, the stop would be right here at about 7.75%, right below that support level. So I think that entering right now, you could do that with a fairly tight stop. Depending on your risk level, my stops run between 5 and 8% typically. So a 7.75 stop really fits right into my investment style. So let's say then that we want to get into this stock. If you don't own it already, you're asking me about it. If you have it and you're trying to wonder if you should hold it, I would say definitely I would hold it right now. Most of the stocks in your portfolio can probably be held for a bit longer here because I do think that the market's going to continue higher. So now we're looking at possibly entering. This is where the trading room piece comes in, and that is to help you time your entries and exits. And I have my little system, if you will, of how to do that. And it only requires two indicators, the RSI and the PMO. This is a 5-minute candlestick chart. You could use a 15 minutes, you could use a 30-minute,
but I find that the 5-minute chart works best for me because I get more information on the trading for the actual day that I am getting ready to enter. You will find that most of the entry points do tend to come in on the open. I am on the West Coast, so that doesn't work out so well for me. So I will come to this chart to help me figure out the best entry after we've gotten a lot of data for the day. We don't have a lot of data for the day, but again, this seems really obvious. We did get that push, kind of that continuation of the rally, and then it's time to pull some of that back. Right now, what we want to look for and what we got on the open was a PMO crossover, a move above its signal line, and a positive RSI. When you get those two things, it's a buy point. When you're ready to sell, selling is easy because all you need to do is wait for that PMO to turn down, and that will get you out usually at a pretty good spot. But I've picked up an extra percentage point, a percentage and a half, just by using this and timing my entry. And I've also managed to get that extra gain because I sell it at just the right time. So right now, we are not at a buy point. Obviously, RSI negative and PMO on a sell signal. What you want to watch for would be this level of support, particularly this level of support at 72.30. And when you start to get to those support levels, and if you start to see that turn and the PMO starts to turn, you could aggressively enter as that PMO is moving higher, or you could just, enter on the fact that the RSI gets positive. I just use a conservative entry. And when I teach it for those actual crossovers, the PMO crossover to the upside and the positive RSI, it's kind of easy for a beginner to, recognize. But once you get better at this and you start recognizing chart patterns and you start recognizing the subtleties on the chart, that will be very helpful for you. So right now, Taiwan Semiconductor, I like the daily chart. The 5-minute bar is telling me this is not the best entry. We have a lot of day for trading here, and the PMO is oversold. So keep an eye out. You get that PMO turn, that could be a really good entry, or you get the turn with the RSI getting positive, or you get both the crossover and the positive RSI. I know I'm kind of beating the desk here, but I want to make sure that that's known. I had a chart and I but I had a PowerPoint slide with the rules on them, if you will. I'll try and send those out, but I am doing a presentation at 10 a.m. Eastern time after this. Not to steal you away from everybody here at this event, but if you want to get more information on the details of how I trade in terms of PowerPoint slides, then you can go to that particular presentation, or at least register, and you'll get the recording so you can get a little bit more detail on how I trade. All right, let's get into some of these because we do have more to go. So UNG. All right, nat gas. So natural gas has been looking pretty interesting, but it's been beat down. This is, come on, guys. This is a textbook head, left shoulder, right shoulder. Here was the neckline, rising neckline. We got the breakdown. The expectation is a move downward that is the height of this pattern. And we did get pretty much there before making that turn. So I think we're at a pretty good inflection point here, but it's just not getting off the ground yet. And right now, with crude oil looking so much better, I haven't looked at it this morning. I'm probably talking about it. It's got a big, big red candlestick there. But at this point, oil has been making the turn. And I really think that that would be a better place to be, simply because this is taking so long to resolve back up to the upside. PMO is still not turning up. The RSI is still negative. Stochastics thinking about moving upward. But again, these are very sensitive indicators. And if they really aren't going anywhere, and the rest of the chart isn't really going anywhere, I would have to say that it would not be something I'd be interested in. But because we are bottoming like this, I don't think that I would get involved in an inverse ETF. I know that KOLD, cold with a K, is the inverse for natural gas. It is a juiced ETF, so be careful with that. Juiced meaning a 2 times or 3 times the move for the index or ETF it tracks to, or stock. So at this point, I don't think I'd go inverse. I think this is worth a watch list. That's a filled black candlestick right now, and typically those end with the next day being a down day. I mean, you can look and usually see those filled black candlesticks occurring near top. So I don't like the look of that filled black candlestick either. So I think I would stay away from UNG. If I owned it, I'd hold it because it is still kind of holding on to this support level. It does look like it's bottoming. So I would consider a hold here, but I don't think that I'd be entering just yet on UNG. And so because of that, I don't think we need to look at the 5-minute chart. I want to just move on to the next symbol. And that would be Lucid Group, automobiles. I had Tesla up earlier. I'm not really impressed. Lucid looks pretty good. I know Rivent, I think, is the other one right now, Rivian, that's looking pretty good. This has a nice double bottom, but yesterday it confirmed the double bottom by breaking out above the middle of it. And now it's failing, it's moving back. I wouldn't say that the pattern is completely busted. We still can really discern a double bottom pattern here. They're bullish. So I would expect it to resolve to the upside. This does look like a pretty nice bottoming pattern. The RSI isn't positive. Today is obviously a terrible day, but yesterday was an outstanding day. So it is paring back some of those gains from yesterday. PMO is on that buy signal, but I'm not particularly impressed. Very flat. We do see a positive OBV divergence, rising bottoms on the OBV, and mostly flat to declining bottoms on price. So that does tell me that if we do get this breakout, it should be a more long-lasting breakout because of the way the volume pattern is set up. This is going to be the big anchor, is the fact that the group itself is doing terrible. One thing that you should remember is that with a stock, the movement, half of it, 50% of what that stock does is determined by what sector it's in and by what industry group it is in. And so you want to make sure that the sector and the industry group are outperforming. And in particular, as I said, in a bear market, we really need to see outperformance, because if it's underperforming the S&P, that means it's going down even faster than the S&P. And right now, the roller coaster ride on the S&P is no fun. So I don't think I'd want to be involved in an industry group that is underperforming, because that's already going to put a lot of downside pressure on the stock we're looking at. So while the price chart looks pretty good, the relative strength of the group has me bothered. I think as I talk about in many of my trading rooms, I think there are better choices than this one. But it does have certainly enough positive that you should hold it if you own it. Entering here, I think, would be kind of risky, just because the RSI is negative and because the PMO is flattened and because the industry group is underperforming. So again, I think there are better choices, but this does look pretty good. So let's just go into a 5-minute. Yeah, you can see this waterfall decline going on today. So when you add that to what we're looking at on the daily chart, I would say I would not be interested in an entry. Now, I do often get questions, not only as to why I use the 5-minute chart, which I've already talked about. I just want as much data as possible during that day, the trading day. But you can also use those 15 and 30-minute charts, and you can use the same rules, if you will. PMO positive crossover with a positive RSI. So you can see there's your crossover. You could have entered aggressively right there on that candlestick, or you could have waited until the RSI got positive. And there you go. That would have been your next entry. The sell point would have been as soon as this PMO started to turn over, which would have gotten you out somewhere in here. So just for a day trader, even using this particular method, you would have gotten in at a good spot. Let's just say you got in here and you got out about at this spot, you made 9.48% just by using those entries and exits. Now, of course, you know, we had a big day yesterday on this one, so that's kind of a lot of that you've made. And then also the 30-minute, the same idea. There is the PMO crossover, and it has a positive RSI, and that would have gotten you in very close to where the others would. So you can make your choice, whatever chart you like, but typically I use a 5-minute. All right, so next up after Lucid, copper. I'm liking materials. This obviously not a good day today. I haven't had a chance to move through these charts. I'm kind of underimpressed, underwhelmed. Okay, so let's get to our default. Okay, actually, I want to do that so it fits. Move this to where I can see. Okay, so let's see what's going on. So copper miners, certainly nice. We got the PMO crossover buy signal yesterday. We have a positive RSI still. Relative strength, stochastics looking good. Relative strength, not great, but not bad either. I like copper. I've been going off on gold and silver. Full disclosure, I do own SLV silver. Whenever I talk about these things, I always want to make sure you know if I own them or not. I don't own copper. But I do own gold and silver, and I'm really liking the looks of those charts. I think they're obviously benefiting from a falling dollar. We don't know how long that will last, but while it is happening, these are some great places to be. All right, so we're getting the big pullback. Notice though that 5-day EMA, the pink line, is crossing above that green 20-day EMA. That is a short-term trend model buy signal as far as decision point is concerned. To me, as long as it's going to hold this rising trend, we should be okay. Looks like a possible reverse head and shoulders developing here, but we don't even have anything that looks like a right shoulder yet. My eyes just are always trained to see these chart patterns, but I'm liking that look. We haven't been able to hold above the 50-day EMA. I'm not really impressed that it didn't do that yesterday, but again, today looks like it's going to be a decompression day, and you know, I think we're going to be okay here. But I do like copper. I'm liking materials now in general. Nothing bad on this chart that I can see. I'd like to see more volume coming in based on the OBV. It's still kind of light on this rally. But I think that it's certainly a hold. I don't know that I would be getting involved until I saw a break from this falling, declining trend here. That would be kind of a high sign for me, or at least another close above that 50-day EMA. But I think that for the risk appetite that might be a little bit larger, you could definitely consider copper right now. 5-minute candlestick, and I think this is going to be the case for most of the symbols we look at today, that they are not ripe. Most of them are not going to be. If you're starting off with a big down move, all of the PMOs are going to more than likely be pointed lower. But right now you can see that PMO decelerating, thinking about moving back up. Just seeing it decelerate after a big move like this is very encouraging. And if we see any kind of upward price movement, the PMO is going to turn up. And that would be a really nice entry on the aggressive side. If you want, you could wait again, like I said, for that crossover, or what might be a good aggressive entry is that turn with the RSI at least starting to rise. It can't rise unless price starts to rise. So, you know, that's kind of what you have to wait for is, you know, obviously a price bottom. All right, next up, Meta. sorry, I just have to keep moving things around. All right, so let's get to our default chart here. All right, Meta platforms, of course, Facebook. You know, the thing with this chart, the first thing I notice is the fact that after 2 days of very strong rally, we really made zero headway for Meta. So that's a bit of a problem. This also looks almost textbook falling wedge. The only thing in my mind that doesn't make a textbook is that the flag is moving sideways, not angling upward. Typically, when they angle upward on the reverse flag, you're going to see the resolution to the downside. Because it's straight moving sideways, there is, I think, a higher probability that it will break out rather than break down. But the fact that we had that great rally and we're not seeing much movement here on Meta, again, I think there are better choices. Let's see, RSI is negative. PMO is looking like it's ready to top beneath the signal line, which is especially bearish. Stochastics never really got started. I mean, stochastics, when they decide to go, they usually just jet right on up. And if I don't see that, that tells me that there is, you know, not necessarily problems under the surface, but certainly it takes the shine off of whatever it is that I'm looking at. And given the other things don't look good here on Meta, I don't know, everybody pronounces that differently. I think of the metaverse, so I always say Meta. Straight across on the relative performance, but then also look in the internet space, that industry group, you can see that Meta is underperforming its group. So it has a lot going against it. And, you know, I don't think that I would be looking here. If I owned it, I'd probably hold it unless and just tighten that stop so that you end up with a stop. Let's see from what we're doing now. Yeah, I don't think I would give it even, I'd give it maybe 1.6% as a stop. But if you really are ready to just not take any loss, you might want to just sell it now and then start looking at you know, an entry when comm services start to get going. But communication services is a terrible sector right now, even with what's going on, at least on the RRG. Tech is a better choice than comm services, in my opinion. Which does bring me to something, and I should have said it at the very beginning, and that is that I'm not a registered investment advisor. So all trading decisions are your own. So when I talk about buy points, sell points, none of those should be considered recommendation or calls to action. So I did say I would. Sometimes I forget to say I would, but I want to make sure you know it's an opinion and not a recommendation. So I'm not liking Meta. I think that I would leave this one behind. And I know we're going to find some more that I like. So don't think that I just don't like things. Copper, I did look at. So hopefully you saw that earlier, or you can go back into the recording. SWX, gas distribution. So utilities really were the strength for a long, long time. And in fact, I'm going to look at, I want to show you the XLU chart really quickly. All right. So you can see that actually I have a better chart. Let's look at my actual, when I look at a sector, I expect it to look like this. All right, so utilities. All right. So with utilities, we had really some great relative strength, but you know, if you've been involved in a utility, you know, September was a particularly bad month. I fortunately was starting to see some really bad information on the chart. I did end up writing this particular decline, but as we topped and started to come back down, I realized that we had a double top forming. There were some problems. So I was holding on to two utilities through the move upward. And, you know, I started to see all these signs with the PMO topping beneath the signal line. I mean, there were just a lot of things that said, okay, this could turn into more of a pullback and something dangerous. So utilities have really been suffering. And honestly, with a bear market rally, personally, I would be moving a little bit more aggressively into some of the a little bit more aggressive sectors. I think, yes, utilities have been beat down, but utilities typically take a long time to make their move and to give you those gains that you really want to look for. And I think in a bear market, as we talk about, utilities are defensive. So I think that those are, great places to be in a bear market typically. Um, like I said, I'm only 15% exposed right now. So, but when I did have higher exposure, I was in utilities, defensive group, bear market. Now that we're going to see a bear market rally, and I think we will, I think this is going to continue. We're just having a natural snapback. I think that you're going to want to be more toward some of those aggressive sectors. And like I said, I think tech is starting to look really good. Materials maybe is not an aggressive sector, but I think they're starting to finally look good. There are a lot of other areas rather than utilities. But if you kind of have that lower risk appetite, let's go back to SWX now. Alrighty. Okay, so let's look at SWX back where we were, beat down 2 days of very strong rally, and that's all it could muster. That again, if we're going to have these strong rallies, when you get in a stock, it should have really outperformed. It's moving lower, but see this one, it didn't get very high, and now it's just falling out of the sky. I would not want to own this right now. I wouldn't want to hang out and wait for a turn on this one right now. It's in a group I'm not really happy with. It's didn't have a very good rally. It's probably not going to have a really good rally. You can always re-enter this one if you start to see the momentum shift. But right now, I know it would kind of just not be fun, but better a 4% decline than a 8 or 10% one. Let's look at a weekly chart just really quickly to see where the next level of support is. So you can see today in particular, and yesterday as well, last week, we lost this support level, super important support level, all of those touches across the board here. That needed to hold. That did not hold. So our next level of support arrives down here at about 59.50, and that would be another 13 and a little bit over, looks like almost 14% decline. So yeah, you might want to, you're not excited about taking a 4% loss on the day, but let's face it, if you don't, you're really vulnerable to a 12 or 13% decline for when it can finally hit the next level of support. So be really, really, really careful if you own this. But personally, I would have gotten rid of it personally back here when my PMO turned. But if you hung out a little bit too long, I don't think I'd want to hang out a little bit longer. All right, so CSX, and how are we doing on time? Very good. If we don't get extra symbol requests, no problem. I will run a scan and we'll look at a couple that maybe look good. I have to look at what happened. I haven't looked, so it could be an interesting look. I will show you 3 of the diamonds that I gave out yesterday, 3 diamonds in the rough. Because you did come today, I'm going to give you that little extra. Sorry, diamond subscribers. Hopefully you don't mind that I'm dropping a few symbols on some non-subscribers. But let's go ahead and look at CSX. Uranium, yes, great one, Dave. We'll look at uranium too, and then I'll go ahead and show you those 3 stocks that I suggested before. I'll type in my special code for you and of course announce it for those listening to the podcast so that you can get a good deal on joining Decision Point to try us out, just so you can see what diamonds are all about. So CSX Railroad, I can tell you right off the bat, railroads are kind of slow movers typically. I mean, we had a move up here of about 25%. but like utilities, they tend to be a little bit slower. Pretty decent rally over the last 2 days, about a 5% rally, which is nice. Not as impressive as some of the others that we saw. And it is pulling back quite heavily. But this still looks pretty good as a nice price bottom. The PMO is flattening. It doesn't look like it's rising yet. RSI negative. And ooh, underperformance all the way around. Underperforming an already very, very negative bear market. So I would say, right, and then notice stochastics. Yes, we're getting this nice little bottoming formation, but stochastics are still kind of muddy. I mean, they're really not moving far. So I would say not a great choice. Again, if I owned it, I think in this case I would hold it, even though it's pulled back. It's still holding above this level of support. So I think that, you know, you're okay there. And if you held it and set your stop right about here, that's about a 4% stop. So you can have a nice thin stop if you're going to enter this. But again, I think if you haven't entered, you would have a much better opportunity in a lot of the other stocks versus this particular one. If you wanted to enter, which again, I'm not really excited about, so maybe I don't want to talk about this. Looks like your entry point is about to arrive, the aggressive one, because the PMO is decelerated and is beginning to turn back up. But RSI is still very negative. So, you know, I'm not a real fan of CSX here. All right, I'm going to do URA. And I'll share some of those stocks. I see Pfizer as well. So once I finish Pfizer, I'm going to go ahead and show you those stocks that I presented to my subscribers. And like I said, they had some awesome days yesterday. So, you know, and I provided them after the close. So I'm a little bit concerned that they're not going to look that great, but we will see when we get there. Right, uranium. This has definitely been on my radar when we've been talking a lot about clean energy, renewables, you know, in order to power lots of vehicles. And I'm not going to get political here. I just don't want to do that. But, you know, uranium, the power plants, nuclear power plants, I think it's going to end up being kind of the way to go to you know, provide the kind of energy we're going to need without using fossil fuels. So I think it's, you know, it's a little scary for some people. And so I think that's really the problem we're running into. But in any case, I think where uranium is going to really see its time in the sun. It's looking pretty good on this rally. It's really up against some serious overhead resistance. Not only are all those EMAs, you know, crowded together, but we also have the lows here at the end of August. We have the highs here at the beginning of August as overhead resistance. So there's some heavy short-term overhead resistance. PMO is starting to flatten again just on one down day. Of course, it's a 3% plus down day. RSI has moved back into negative territory. Stochastics still look good though. So this does tell me that this is probably a natural snapback. And, you know, the indicators are starting to look a little ugly just because of the fact that, you know, it's a big snapback today after a pretty nice move. But stochastics are looking good. It is outperforming currently on this rally, the S&P. You know, as a lot of people know, I'm kind of a more conservative investor, which is also one of the reasons I think I get a lot of great subscribers, is because of the fact that I am more conservative in my investing style. I like confirmation, confirmation, confirmation. So I would want confirmation here before I entered with a breakout above the 200-day. It's looking really vulnerable here. It's up against that serious resistance. So I would be a little bit careful with uranium right now, and I would want the confirmation. If you're looking to buy, the buy point is coming in here, the aggressive one. You can see the PMO is starting to try and tip upward here on this rally. I would say because this deep decline really, you know, moved that PMO almost vertically downward. I would say a more aggressive entry would be appropriate on the rebound, but just be careful, like I said, with uranium. We'll look at Pfizer. I'm going to show you those diamonds, and then I will hit the road here. And if you have any questions, I will give you a quick coupon code here in just a moment. All right, Pfizer in consolidation. This looks a lot like the first stock we looked at, TSM, but we do have the PMO giving us a positive crossover. Looks like it's getting close anyway. RSI is negative, and stochastics are pretty much asleep. So stochastics being asleep would be a bit of a problem for me. Also seeing this underperformance against the pharmaceutical group. I will tell you that on Fridays for my Diamond subscribers, I give them a sector and an industry group to watch, and then a few of the symbols within that industry group that they might want to consider. And interestingly enough, last Friday, my industry group to watch was pharma. So pharmaceuticals I've been a fan of, but PFE was not one of those symbols, and that right there is why. So if you're interested in a pharma, let's see, what were the ones I gave out? If I can find my notes. RDY, I think, was one. So let's look at that. So on Friday, I talked to subscribers about RDY. And so on those rally days, really great move to the upside versus what we saw on Pfizer. Let's see, CORT, I think, was another one. And not quite as good of a performer, but still coming in on an entry here, you're still, you still got about a 2% plus gain on it. Certainly looking a lot better as far as the indicators go. So with diamonds, that's the kind of thing that you're going to see, and that's the kind of thing you're going to get on Fridays in particular after the trading room when we've figured out what that sector and industry group are to watch. So let's move on quickly to those diamonds, and then I know I really have to get off the stage here because I want to be mindful. So this is one of them, down 3.5%, I know, but again, when you look at these rises of over 5%, 6% on yesterday, I'm not surprised to see pullbacks here. But as I told subscribers, gives you a better entry, right? Because you got that big 3.5% decline. It's still holding above EMAs. It has a V bottom, positive RSI. You can see the indicators, what I'm looking for. Look at the group. I mean, the group is seriously outperforming, and it needs to, given the bear market. And this is a pretty good one as well within the group. So that was one that I gave out. Fabrinet was the other. That's actually up today, so I'm happy with that. We had gotten that crossover on those EMAs, still looking good. Looks like a bullish engulfing, and you can see the PMO nearing a positive crossover. Stochastics really doing their thing. These are what I call diamonds in the rough. This is exactly what I'm looking for. Shoals, which is renewable energy. I think I mentioned it to Diamond subscribers. An aggressive group have to be really ready for some volatilities. You have to strap in that seatbelt. And you can see that, yes, it is having a big pullback. But again, rising trend, not compromised. EMA is still holding up as support. I think that if you're going to go technology, renewable energy is looking really interesting. I mean, here's the thing. So here's the outperformance of renewables. But what happened during that same period? Nothing. In fact, some decline occurred during that time. That's because it just was moving lower, slower than the S&P. So outperformance can be a little bit of a head fake. So just be careful. But I do like the look of this one still. And I think if we do get this bear market rally off the ground, that this is going to be a pretty good place to be. But that's an example of what I do with diamonds in the rough. All right, let's do our quick little pitch again. Subscriptions. Decision Point Alert gives you that overall market review. Decision Point Diamonds gives you that Diamond Mine trading room on Fridays, which I do exactly what I'm doing today. And you also get those 10 stock picks, including 3 ETFs a week. So if that interests you, We have very, very, very low price points. I recommend getting both for the $68 a month, but if you're only interested in particular diamonds, great. If you use the coupon code BEARS, BEARS. If you use that coupon code, you will get your first month of Decision Point, any subscription, including the bundle, for $14. So if you want to try us out, it's a really great way to do that. The coupon code again is BEARS, BEARS. I'm typing it in the chat so that everybody can remember and see. So at checkout, you will be able to put in a coupon code, put that in, and your first month will only be $14. Woohoo! I'm a little bit off there, David, but I think I came in at a pretty good point, and I really enjoyed this new format, and I would love to come back and do it again.